What's up, everybody? It's Mrdothemath here, and today we're going to calculate our compute our federal income tax, right? So we're going to look at, like in the previous video, we talked about figuring out what our taxable income was, and now we're going to take our taxable income and we're going to figure out how much we have to pay in actual federal income taxes, right? Granted, here is your disclaimer. We're going to be looking at the marginal tax chart from 2012, which is significantly different from now, but you'll get the idea of how you do it, right? Looking at this 2012 chart, okay? So let's just dive into it. All right, so marital status it plays a role in figuring out what bracket that you're in, what column that you look at, marital status and not the number of dependents, but primarily we're looking at marital status and your place in your household, right? So here's our first example. We're gonna look at two different examples so you can just see. All right. This is a single woman who has a gross income of $62,000, right? She paid $4,000. She has gross income of $62,000, right? She paid $4,000 in a retirement, an IRA, right? Which makes her adjusted gross $58,000, right? Right. So her adjusted gross is $58,000. That's how much you start to look at once we start to think about our deductions. Based after her deductions, that's like she don't have no dependents. So after home tax, state taxes, property taxes, and all of those things, her taxable income came down to $42,100, right? And that's what we're going to be looking at. This is our taxable income. This is where we start. Now, from the taxable income, we'll take this to our table, or the marginal tax rate, to figure out how much she's going to pay in income taxes. So this no longer matters, and the focus number is $42,100. So, and now we're going to get ready to do the math, right? There is the first bracket. All right, the first bracket is like $10,000, right? So the first bracket pays $10,000. The bracket goes up from $0 to $8,700. If you make from $0 to $8,700, you pay 10% in income taxes, right? Then if you make from $8,701 to $35,350, you're gonna pay 15% in taxes. And then from $35,000 to $85,650, you're gonna pay 25% in income taxes. $42,000 falls within that 25% bracket. But here's the caveat: you only pay 25%. You only pay 25% once you get inside of the 25% bracket, which means that from the amount of money that she makes from $35,351 to $42,100 is the 25% that she pays, right? So the first $87,000 she's gonna pay 10% on. So that's $87,000 she's gonna pay 10% on. Then the next amount is gonna be from the $87,001. Here's the math. It'll be $35,350 to $8,701, right? She's gonna pay 15% on that. And then the rest is going to be paid. So that's from $35,351 to $42,100 is where she pays 25% on. And that's what I was talking about, right? So this is where the math goes, right? So essentially you're going to multiply 10% by 8,700, which is 870. You're going to do 15% by this difference, right? This difference calculates to be, I'm sorry, I already did the math for us, so we're not pressed for time. 26,650, right? So when you multiply this by this difference, you're going to end up with $3,997.50, right? And then this final difference, the $35,351 minus $42,100, is going to be that difference is going to be 6,750, like 6,750. You're going to multiply that by 25,000, and that's going to give you a total of $16.87.50, right? So from each bracket, the 10% bracket, the 15% bracket, the 25% bracket, you get these values. You're going to add these values together to get the federal income taxes that you're going to pay, right? When you add those together, it's going to be $6,055, right? That's how much she owes in federal income taxes, right? So basically, after you get your taxable income, we'll go to our table that I'm going to put over here in this corner so you can look at. And then we're going to do the math, right? So 10% of 8,700, 15% of this amount, which was 26,000 some change, and then 25% of the 6,000 and some change, right? Add those together, and then you get how much she owes, right? Let's look at another example, all right? This is going to come from the single fella with the dependent in our homework, right? So this single fella, he brought in 53,000. He brought in, his gross income was $53,320, right? After adjustments, he made $50,120. Then when you think about his deductions, one of the deductions being his dependent, his taxable income came down to $39,000. So it's $39,070, right? That was his taxable income, okay? Now, how much is he going to pay in income taxes? Let's look at it, all right? $39,000, once again, falls in that 25% range, right? So the first 10% is his 8,700, right? The second 15% is, again, that 8701, and well, let's write it correctly. 35,350 minus 8701, right? And then his final, so 35,000, 39 is bigger than 35,000, so he's gonna have to pay in that 25% bracket again. All right. So it'll be the 39,070 minus the 35,351, right? You do this math, and then we'll figure out how much his taxable income is, right? And so, again, because we're pressed for time and I just want you to understand it, we'll do the math. So it's 10% of 8,700, which is 870, right? 15% of this difference, which was 26649. Let's show it off. So it'll be 8,700 times 0.1, right? That's 10%, right? That's going to give you 870. Then you're going to have 26,649 times 0.15. That gives you 3,997.35 cents, right? And then the final amount is going to be this difference, which was like 3,719 times 0.25, right? Which gave us $929.75. So this was the math involved with that, right? We subtracted these differences. Now, if you worked out that first problem with me and your numbers were slightly off, they're off because in the table in this particular book, in this next bracket, they subtracted 350 instead of 351. And also in this bracket, they subtracted 8,700 instead of 8,701. But what I did in my example is I accounted for that extra dollar in both of those brackets, right? So again, you gotta go up. You have to consider every bracket until you get to the amount that is taxable, until the taxable income, right? Which was the 39,070. It's in the 25% bracket. And then you do the math. So 8,700 times 10%, 26,649 times 15%, and then 3,719 times 25%, right? You get these values here. Then you do the math. So it's going to be 870 plus 3,997 and change plus 929 and change, right? And that's going to give us an income tax amount of $5,797.10. That's how much he owes the federal government after for income tax, right? So that's the federal income tax. Okay, so that's in a nutshell. First thing we got to do is figure out what our taxable income is, right? From our taxable income, we come to the marginal tax chart, right? And you have to, and so in the marginal tax chart, what you'll see is they have the percentage breakdown, whether you're married, whether you're single, whether you're married filing together jointly or married filing separate. All of those things matter, right? They even have the head of household. So these are questions that you answer when you fill out your W-2s, when you get a job. And those questions, those answers to those questions come into play when you pay in your income taxes at the not at the end of the year, but at the beginning of the next year, right? So again, there's the steps. Step 1, find your taxable income. Step 2, find your place in your marginal tax bracket, right? Then from there, step 3, you're going to simplify or do the math, right? And then step 4, you're going to add those values together to get the amount you owe. All right. So that's how you calculate that's how you compute the federal income tax that you're owed, that you have to owe, right? That you have to pay. I'm sorry. I hope this helped. I hope this was educational to you. And if you like it, if you like this video, hit that check mark or that box. If you want to see more videos like this, forget to like and subscribe. If you have any questions, comment below. Mr. Mrdothemath out.